Morning, everybody. Welcome to the Thursday workshop. Just a brief rundown of the news and economic data for the remaining 2 days this week, and also just a little review of what's happened so far this week. I'm going to go straight to the financial calendar as provided by Forex Factory. Just a very quick review. First day of the week was the last day of April, the final day of the month. Can be a little bit distorted. Data typically has been pretty disappointing and continues to be so. On the data front on Tuesday, which was a public holiday, the data was pretty poor from certainly from our standpoint, looking at the manufacturing PMI in the UK, ISM manufacturing in the States was pretty poor. Wednesday we had the German unemployment and also the final manufacturing PMI data from Europe as well. Not positive at all. On Wednesday lunchtime we had the precursor to our very important non-farm payroll data in the States. We had the ADP non-farm payroll out at 1:15. We're expecting a figure of around 178, and this follows a slight revision to the figure for March of 209,000. Previously reported, they revised that down to 201,000. And we had a figure of 119, which is significantly less than expected. The ADP survey seems to be a little bit out of kilter with the Bureau of Labour Statistics, who produced the non-farm payroll data that we're expecting on Friday. I think there seems to be a general consensus that this data, there has been a slight sort of, a little bit of a misunderstanding about how the data is presented, to the extent that the rather warm winter has distorted the growth numbers to a certain extent, or the employment numbers to a certain extent, and I think the April number was just an adjustment to that. So what we're expecting on Friday in terms of the non-farm, let's just scroll down, we're actually expecting a pickup from the very poor 120,000 first reported for, well, certainly reported for March. and April we're looking for a figure of around 176,000. Anything significantly worse than that, I don't think the markets would treat it too kindly, but rather paradoxically the markets generally, equity markets have done rather well over the last 2 to 3 weeks, and I really think it's if it's a bad number, QE discussions further will brew up again, which inevitably help the markets. If it's a good number, market will typically should do okay as well. So I think it's sort of on the surface it looks like a bit of a heads, the market wins, tails it wins, but let's wait and see. Here we are today, Thursday the 3rd of May. The key interest for today is the interest rate announcement from the European Central Bank, the ECB, the rate setting committee. They're meeting in Spain, in Barcelona, which is quite interesting, bearing in mind a lot of the topic is now not just the debt crisis, but the sort of growth worries that are now percolating throughout Europe, not just within the peripheral countries within the Eurozone, notably in Germany and France, where the German manufacturing data has been particularly poor just of late. So we're looking to find out exactly what Mr. Draghi, Mario Draghi, the president of the ECB, will be releasing. What is the news will be at 12:45, and then they have a press conference at 1:30. I think we're all interested to know what the growth versus austerity debate that's been brewing. Really, we know all about the sort of recently agreed fiscal compact. Now he's talking about a growth compact. And we're not altogether sure exactly what he means or what he's going to say. So 1:30 will be quite interesting as to see what actually happens. There are a few rumours percolating the markets as well that there could be a rate cut. The consensus is for no change, so interest rates at 1% will remain at 1%, just highlighted here. But I'm hearing a few rumours about a quarter-point cut, possibly. But let's wait and see. Other than that, the regular weekly unemployment claims, obviously in the key week for non-farm payroll, the first Friday of the calendar month, that'll be watched relatively closely as well. This afternoon we got ISM non-manufacturing, or what we call the the services PMI. That's out at 3 o'clock. And as I say, all eyes focus tomorrow on non-farm payroll. We're expecting a figure of around 176,000. As I say, it has been a little bit volatile. It was certainly a surprise last month, but we await that one quite eagerly. In terms of the market reaction at the moment, well, I've got chart, the middle top chart here, that's dollar-euro. You can see there's a further pullback in the euro with the dollar continuing to strengthen ahead of this ECB announcement. Also, euro giving up some ground against sterling as well. We did see euro sterling improve in the early hours this morning, but of late it's given it back in spades fairly quickly. Aussie dollar, well, that's very much a continuation of the trend really for the time being. Gold, really under pressure. We were hoping to see a bit of a rally back up to 1650, but that still looks to be stumbling, and if the dollar continues to rally, one can assume that gold will remain under pressure. Okay, well, that's really it. A summary of the news and data that's coming out for the last 2 days of this week. Most important data really of the week, today and tomorrow, certainly with the ECB and then non-farm tomorrow. Thanks very much for listening. Good luck with your trading, and we will reconvene next Wednesday. Thank you.